What if the most common first step people take when investing is actually the biggest mistake they can make? Today we're going to break down how to build your financial future on solid ground, not quicksand. Let's get into the smartest order to invest your money.
Let's kick things off with a quote that just makes you stop and think. It really highlights this huge but super common blind spot, right? We're all drawn to the thrill of a big win in the market, but we completely ignore the silent drain that's happening right under our noses.
And this really forces us to ask a tough question. Is your hard-earned money just leaking away? Are you pouring all this effort into your investments only to have it all drain out from the bottom? Let's figure out if you've got a leak.
All right, first up, let's diagnose this whole financial leaky bucket thing. It's the one common mistake that can totally sabotage your goals before you even get off the ground.
You know how it is. It is so easy to get caught up in the hype. You hear these stories about people making a fortune overnight in stocks or crypto, and that fear of missing out, that FOMO, it just kicks right in. The temptation to jump on that rocket ship is unbelievably strong.
But here's the cold, hard reality. That 20-something% interest on your credit card, that's not a small drip. That's a massive, gaping hole in your bucket. It's a powerful force that's actively working against you, making it almost impossible to actually get ahead.
Okay, next up, let's just look at the straight-up, undeniable math behind all this. Forget the hype for a second, because the numbers, well, they tell a story that's pretty much impossible to argue with.
And it really all boils down to this one simple choice: a guaranteed win versus a potential one. See, paying off high-interest debt is a guaranteed victory. You immediately stop losing money. But investing in the market, that always carries risk. It's a game of averages, not guarantees.
I mean, think about it this way. By paying off that card, you are literally giving yourself a guaranteed, risk-free 22% return on your money. Now, where else are you going to find a deal like that? The answer is nowhere. It is the single most powerful financial move you can make, period.
And when you actually see them side by side like this, the choice becomes so obvious. That guaranteed 22% you get back from paying off debt just completely dwarfs the historical average of the stock market. I mean, it's not even a fair fight.
So, now that we've seen the math, let's talk about something that's just as important: the psychology behind all of this. Because it's not just about the numbers on a spreadsheet. It's about shifting from a state of constant financial fear to a place of real control.
And this is exactly where the emergency fund comes in. And it's so much more than just a savings account. It's your psychological safety net. It's that cushion of cash that lets you breathe and think clearly when life inevitably gets a little messy. This fund, it's a crucial buffer. So when life throws you that curveball, a sudden car repair, an unexpected medical bill, you don't have to panic. You won't be forced to sell your investments at the worst possible time, or even worse, go back into high-interest debt. You have that cushion. You stay in control.
Okay, so let's put this all together. Here it is, the smartest order for your money, a clear, simple, step-by-step path to building real, sustainable wealth.
And here we go, a simple 3-step plan. Step 1, destroy that high-interest debt. Plug those leaks in the bucket. Step 2, build your psychological safety net with an emergency fund, and only then, once you're on solid ground, you start pouring money into investments.
So ultimately, you have to ask yourself this question. Are you sprinting, trying to win the first lap, or are you pacing yourself to actually finish the marathon? Because smart investing isn't about being the fastest person out of the gate. It's about having a strategy that guarantees you'll be able to cross that finish line.